See, typically whenever we do a valuation, see, the whole objective of any equity analysis is valuation, or for that matter, anything which a CFA will be doing is valuation only, whether it is equity or fixed income or derivatives, whatever it is. Valuation, finding the true worth of each of them, and then creating portfolios based on the assessment of the true worth of each of these investments. He is combining all of them to create portfolios. So, as far as the equity is concerned, before we do the valuation, see, in the valuation, what are the things we came across? Estimated cash flows. Future cash flows I have to estimate. Cost of equity I have to estimate. Right? How would the growth occur? What is the proportion of growth in each of the years? I have to estimate. So, if I have to estimate all these numbers, they will not be common for every company. Cash flows, the way at which they are growing, probably differs from industry to industry. If that industry is having a big, it's depending on what is the scope for that industry. Right? If the industry is already a stable industry, then probably it may not grow that drastically every year. Right? Let's say when the whole demand is already matured, a drastic growth cannot come every year. It will be a stable growth. But if it is a new industry altogether, probably what was the scenario 10 years back with respect to your mobile phone industry? A drastic growth in the last 5, 6, 10 years. But today there is not such a big growth. All telecom giants are struggling today. Because by now the industry became very matured. Everyone is already holding 2 cell phones. How many else he will hold? And everyone is just playing on 1 paisas and 2 paisas only, throwing off the old SIMs, taking a new SIM. Probably the SIM cost is much lesser than the talking balance. So with all these things, there is a good proportion of people who are going with these kind of things. So the telecom industry is having a lot of problems. 2G licenses being called up and 3G is not that successful. So many issues existing. Right? Now the telecom industry is having some kind of doldrums to some extent. Especially leaving out the top 4, 5 big players. The new entrants whosoever have come in, they are not able to break through into bigger profits. Right? They are introducing paisas and paisas, but they are never converting into rupees. And the biggest problem is the quality is becoming a big issue because they are playing on the price. So, keeping all those things aside, so as a equity analyst, unless I understand such kind of industry, probably compared to that, right, some other industries may be doing much better. Or in some cases, let's say in the pharma industry, recently there are a lot of jolts which have come to companies like Ranbaxy. They had to call back all their products, couple of their products. Right? So these things I can understand, one, from a thorough analysis of the industry and a thorough analysis of the company. Some industries, there may be a big scope in India, and some industries the scope may be very limited. Right? Today, everywhere, so every news article which I am processing, I may have to process from that standpoint. Which industries are going to be benefited by this? Which industries are going to be at a loss because of this? Right? Some particular, let's say, hike occurring, petrol hike occurring. Because of this, which industries would be benefited? Which industries would be at a loss? Probably petrol companies, the oil companies, they'll have some amount of benefit. Because one, you have to think from that standpoint. Okay, why is that with the petrol hike, the oil companies will be benefited? One is, okay, for them their revenues will go up. And people will never cut down their demand just because petrol price goes up. Right? We are used to using the bike only or car only even if the petrol price reaches 5,000 rupees a liter. So we are in such a kind of a situation. So obviously it will increase the revenue of the oil companies. But on the other side, there could be some other companies that could be impacted. Again, they are all subjective. Every analyst has to think in his own manner. So which all companies are using petrol, or probably diesel, or any of the oil related byproducts. Probably if I am talking about petrol, probably the bus companies or these kind of public transport companies are using this. Now, is there any kind of increased revenue for them, or people stopped using those services? If they don't increase their price, but the cost for them is increased, obviously their profitability is going down, right? And if in that kind of a company, if I invest, their profitability is down, so better not invest in them. Though as a consumer, I keep scolding about a petrol price increasing, but as an investor, I prefer to buy the shares of Indian Oil Company or BPCL, because now they will become more profitable because they have increased the share price. So I am playing a dual role. As a consumer, I am dissatisfied there, but as an investor, I am happy they will go and grow up in profits. So, based on the kind of role you are playing, you will have to look at the understanding of each of the industries and the company. So for that, some kind of frameworks are given as a part of this chapter, because any growth which you have to give or any forecastings you have to make, the good forecasts and good growth, good numbers can be given. Is an IT industry more risky compared to automobile industry? So which means KE will differ. So to assign those three numbers, at the end we made the valuation as a very simple formula. But the whole equity depends only on that valuation itself. There is no other formula, only one formula, and that formula has three numbers, right? The future cash flows, KE and G. Only three values are there. But determining those three values in reality is a very tough task. So for that we are trying to understand all these areas of how do I understand the industry and company and all these things before I can take an appropriate decision relating to those numbers. So from an industry standpoint, so typically people call this kind of an analysis as EIC analysis. The first step is economy, then industry, then company. Right? Probably if I am looking at global multinational investment, then probably first thing I have to look at is how is the economy. Then within the economy, which industries are worth investing. Within the industries, which companies are worth investing. So it's a kind of a typical top-down approach which people do when they are shortening or narrowing down on their investments. So from an industry standpoint, what all they can get, the potential growth of the industry, right? Some industries are growing at 10% every year, but some of them are growing only at 2% every year. Or some industries are falling. And it's very common. Probably I can say the telecom industry was at a peak probably 5 years back. But in the last 2-3 years it is falling. Versus even let's say hotel industry, it's decently booming. Versus even a pharma industry, it's decently growing. Right? So there are some industries which are growing. So understanding an industry should help me in the next few years. What is the kind of growth that can happen to this industry? How many competitors are there in this industry? So here this is where economics also comes into picture. What is the kind of this industry here? Is it a monopoly? Or are there only 2 or 3 players? Airline industry, hardly 5-6 players. But what is the kind of growth that is there in the airline industry? The more I understand about airline, why is that airline industry is not able to grow in India? Whereas in US, people only keep using airlines for a lot of things. What is the reason for all these? So the more and more I start digging into these aspects, I'll get a lot of interesting understandings about it. So that's where when you get into an equity research department of any company, you'll first focus only on one sector. Your job is research on one sector only to the core. Because the more and more you get an understanding of one single sector, you will master the investments in that sector. Then slowly you will handle the second sector, third sector. That's the way any equity research analyst will actually end up in a primary jobs. So then and appropriate debt levels. Now I cannot say as the textbooks say the appropriate debt equity ratio is 2 by 1 or 2 is to 1. Today the industry structure is completely different. Software companies are operating at a zero debt levels. Service companies are operating at zero debt levels. Whereas heavy capital intensive industries are running at 60-70% debt levels. I cannot apply the same mantra to all the kinds of industries. So once I am understanding an industry, I should understand all these credit risk. The more the debt levels the industry is having, the more the scope for a credit risk. Infosys has zero credit risk because it has never taken any kind of a debt. Right? So understanding any kind of an industry will help me even in case of portfolio. It will help me which industries I have to segregate. Which are risky industry, which are stable industries. So if I want more return, I'll put, okay, 40% in stable, 60% in risky. Industry level itself, I'll choose, okay, 60% let me invest in a risky industry, 40% in a stable industry. Some kind of proportions I can decide. And out of that, which companies within this 60%, I'll do the next level analysis. Right? So from that standpoint, I require an understanding of the industries. So industry class, okay. Now the biggest question that comes is what is industry? No definition to it. What you define as industry is different from what I define as industry. Again there is a question mark there itself. Now, why you and me? We'll talk about standard guys. Right? What BSc classifies as automobile industry is different from what NSC classifies as automobile industry. So you and me can classify anything else. Right? Because BSc looks at even an auto spare part manufacturing companies as a part of automobile industry. Whereas NSC does not consider them as a part of automobile industry. So, and probably if you go to money control, they'll talk about something else as the industry. So, and if you go to 4 different portfolio managers or mutual fund managers, they'll talk about 4 different definitions of automobile industry. I mean, when I say definition, which companies are included as a part of the automobile industry. Now, because of the companies inclusion different, according to you, the industry sales will be different. According to me, the industry sales will be different. Right? Probably some companies will consider Hyundai also as a part of the automobile industry in India, whereas BSc does not consider Hyundai as a part of automobile industry in India because Hyundai is not listed in Indian exchange. Now the sales will be a big difference, right? So the definition of the industry itself, I may have to be very clear on what I am defining as an industry, right? So there are so many definitions of the industries across, right? It could be done based on the usable products. It could be done based on the demand and supply. It could be based on the cyclicity. It could be based on multiple dimensions. People can classify the industries. So there are some which are provided by the government agencies or commercial providers also. They have given, like as I said, when we talk about BSc, there is one definition of the industry. When they say auto index, they'll define BSc as auto index. Let's see why to discuss that. Where are the indexes? So, as a part of the auto index, BSE has taken 10 companies. Right? What are those 10? These are the companies which BSE has considered as a part of auto index. Tata Motors, Mahindra and Mahindra, Bajaj Auto, Maruti Suzuki, Hero, Bosch it has considered. Cummins India, Excise Industries, which is a battery-based company, and Ashok Leyland and Bharat Forge, again a spare part manufacturing company. Eicher Motors is not there. Now let's see NSE. Eicher, one of the bigger companies. Now that is not there in the list.